What is up YouTube? This is your host Yasin Nizami, and here we are back into lockdown once again. I don't know for how long, but it's a reality. We have to live with it. I know it's frustrating for people like myself with young kids. Not easy to keep kids at home. Let's dive into our today's topics. So today I'm going to cover some of the recent figures came out from TRREB that's give you some of the insight what's happening in the GTA market, as well as some of the market news that came out recently. So let's take a look at the TRREB data that came out last week. So that shows you the total number of transactions that goes through the TRREB MLS system, right? And if you look at the year-over-year total residential transactions, you can see it's a significant growth from compared to March 2020 to March 2021. The transaction was about 8,000 and it has gone up to almost 100%, showing 15,652 in March 2021. So it's a big spike in terms of number of transactions compared to last year. If you look at the month-over-month comparison, so getting stabilized, and it's a dip of 0.6%, so we can neglect that for our assumptions. But it's showing that the market is kind of stabilized. If you look at the average selling price, right? Last year at the same time, it was $902,000. It has gone up to over $1 million, which shows 21.6% year-over-year increase in terms of average selling price. If you compare this with the last month, it is still 4.2% up. So the average prices keep climbing up, despite of a lot of inventory coming into the market. So if you look at the listings here, you see that the inventory level last year at the same time were quite low, right? It was like 14,434 listings available, compared to this time this year in March 2021, it has gone up 57%, just 22,709 listings available. So keep in mind, this is not a typical demand and supply issue. Unlike last year when we were in pandemic, people were kind of afraid and paranoid and confused, and they were not putting their houses in the market to sell. Right now, we're not seeing this. Right now, we are seeing the listings are coming up. People are willing to sell their houses, putting them into the market. So it's not a typical demand and supply issue. But the problem is listings are coming, the inventory is coming, but the demand is outpacing it big time. And this is the extraordinary demand that we're seeing in the recent 6 to 8 months because of multiple factors, liquidity in the market, a lot of unused cash sitting in the bank accounts for Canadians, a lot of citizens who were living in Hong Kong now getting cracked down by Chinese government, and they are moving their friends into Canada. Of course, that is contributing into this hyper growth in the residential market. If you look at the days in the market, you can see the days in the market has gone down 23.5% compared to last year. And if we compare this with the month over month, even then from February comparison, it has also dropped down 23%. So that shows the aggressiveness in the demand, where the people are willing to buy houses as soon as it goes into the market. So the days in the market is a very good indicator to tell you that. Now, if you look at the HPI index, now this is the government agreeable metric to assess the house price over the 10 years based upon certain characteristics, right? And if you look at the chart is keep growing upwards, right? There was a small dip post 2017 when we saw there was a price correction came in. And after that, since 2019, it is keep climbing up. And of course, we have gone past 2017 levels, and the average price, the home price index, has also crossed a million mark. The other thing I want to share with you guys is the government intervention are likely to come in order to make some changes in the market, because as we know, there are multiple factors to contribute into this hyper growth, and it's not healthy in the long run for the economic stability as well as the housing for the average Canadian. So the government interventions is very likely to come. We saw the announcement on the stress test came out last week. Although it's not going to make a huge difference, but it will make a slight dent into the housing market, at least for the first-time home buyers who are still struggling to come up with the deposit to put down, they will have a little bit difficult chance to qualify for the mortgage going forward once this stress test is implemented. Well, it is still there, but the levels are going to get increased. So we will see more interventions coming into the market from government. We did not see any major announcement from the budget earlier this week, even though they announced some taxes on the unused properties owned by non-Canadians and non-residents. But other than that, there was no major announcement with regards to the budget. The questions that I typically ask by a lot of my viewers is, hey, what's happening in the market? Is it going to get crashed? Is a price correction unlikely to happen? And my answer is, it's very difficult to answer because there's a lot of factors involved in terms of changing the dynamics in the market. And my personal observation is the government and the lending institutes will not basically do anything major in order to significantly impact the market. They may do slightly policy changes in order to correct the price a little bit so that at least it can be controlled and managed properly. If you're expecting to a big crash, I think it is less likely to happen. It will only happen when something happens internationally at a global level, like if the European banks are gonna get hit by the huge amount of debts, or the Federal Reserve also getting a lot of debt crisis in US, which is less likely because they are doing in a very controlled fashion. If that happens, then of course it will trickle down to Canada as well, and then we will see a market crash. But until then, it's very less likely to see a market crash because these banks are going to play very safely. We just saw an announcement this morning that the Bank of Canada is also slowing down the quantitative easing program. They're seeing some positive recovery in the market, although it's very early to say, but they're seeing some recovery in the market, and based on that, they will track down their quantitative easing program, and perhaps they will start increasing interest rate from 2022 rather than 2023 as per previously stated by Bank of Canada. So a lot of observation. Of course, it will be seen as time goes by because we are still in the lockdown again. I think the economic recovery very slow, and we have to see that summer when we come out of the lockdown again and see how the economic activity booms, borders are open, immigration comes in from international countries. This will drive another spike in the market activity. More to see. I hope this is helpful for you guys. Until my next video, I'll see you next time. Take care.